What's going on, everybody? Hope you guys are doing well. So in this video, we're going to be looking at a bread and butter setup, kind of an everyday model. It's going to include entry time frames, techniques, profiles, kind of meshing all of the things we've been studying, the backtesting videos and the PDFs all together. And hopefully you'll get some value out of this. It's the model that I'm most likely going to be using majority of 2024, potentially to 2025. And you'll see that once you get good with it, it does provide high quality setups and you're able to sometimes capture the entire morning range. So hopefully this video proves helpful to you and insightful at the least, and we'll get straight into it. All right, so we're going to look at basically using an everyday model. It's going to be based on a couple things: 1 hour, 15 minute, 5 minute, 1 minute. We're going to be looking at the 3 to 4 to 5 minute candles that print right after 9:30. This will show us our most recent reversal or potential continuation. And then we'll just enter using a 1 minute or 5 minute PD array and target either time of day, so between 10:30 and 11. Obviously, depending on the news profile for the day, or using exit liquidity. Preferably on the 1 hour or 15 minute, we're going to be using premium PD arrays on the 15 minute or hourly, or discount PD arrays, obviously depending if we're bearish or bullish. There also needs to be a 1 hour framework of why we're likely to expand on that specific day. So preferably if you can argue a 1 hour expansion, you'll see a nice range move. Days like Monday or low probability days, possibly before 8:30 news. So your low probability days are going to be for any 8:30 news. A lot of times you'll have more difficult days, not impossible to trade, but difficult. So these two things will cause higher probabilities that we see a return back above or below the 9:30 Judah swing. So almost 2 Judah swings than the true move. A lot of times this happens when there's a higher time frame counter bias. So if you want to screenshot this, just take a screenshot of this, or I'll post it up in on the screen right now on the side. We'll go ahead and delete this. But basically what we're going to be looking at is the first 4 to 5 candles that print right at 9:30 and looking at what we sweep going into there. If we go to the next day here, we want to see a 15-minute liquidity sweep. So if we use the 15-minute chart, I just use the 5-minute chart for a liquidity sweep, and then a CISD also in that way. If we see none of that and we're just continuing, then expect that we're going to continue into 10:30 or 11, and that's the preferred time we're going to be exiting, or using a 15-minute or hourly PD array to get out. Excuse me, it's late, so my voice is messed up. We'll go to 9:30 here. So first candle prints, we have 10 a.m. news. So we're sweeping both sides here, buy side and sell side. So we're just going to wait. Prints above, we're holding. Now, in this example, I'm watching the order block respect over the fair value gap. So if we're holding a fair value gap, or we're also holding an order block, something like this, I'm going to be watching that instead. So play the next 5 minute. So now it breaks below, close below. So I'm already favoring downside move, and I'm looking at this as the retracement, or the reversal, sorry. I'm seeing pretty good closure here. I'm looking at these highs and to be closed above them. Rarely. I am watching the fact that we just did not run this high out. So I'm anticipating downside. We can be short here. Stop at the high. Now we do have 10 a.m. news, so maybe a little low probability, but we'll zoom out, target any PD array in case we're extremely bearish. I'm just entering before a 1 minute PD array, but you can use a PD array as well. 3%. Now we're looking between 10:30 and 11, or if there's a low already put in between that, then we'll get out. And there's your drawn liquidity hit prior to 10 o'clock. Let's see what 10 a.m. does. And there's your low forming within the range. So that's just one example of a full model. using that first 5-minute liquidity sweep. You can see we got the 5-minute liquidity sweep. It'll be 15-minute liquidity sweep now, 15-minute liquidity sweep, and then a 5-minute CISD right here as it closes above. And then you remember the bullish order block I was watching, this one? This now turns into your CISD point, and you can actually use this as our retrade level if you want to flip it to the bearish end. And every single time once we close below here, any PDR that lines up near or at this CISD level, in this case we have a bearish fair value gap, as well as this last up closing candle, or this up closing candle, which would be your 1-minute breaker, right? So that's your order block right there. Actually, I can extend this out. So we got our breaker. Let me move this really quickly. But we got our breaker. So it runs the 5-minute out. Here's your 45 level. So 29, 39, 45 is the sweep. Trade slack lower. And we have a 5-minute CISD, which we can use as a reference point, but we also can use the 1-minute CISD to refine our entry down, which this would now be dragged to here. Shorts that with the gap, and that's your full model. And we could actually hold to the window, but we already got our nice 20 points in the higher time frame liquidity pool, which is your 15-minute. So that's a full model by itself. You wouldn't need really anything else. You can refine it down using the 1-minute, 3-minute entries, something like that. But 9 times out of 10, this is going to play out. Obviously, low probability days, Mondays, it's going to be a little harder, but go to the next day and see if we're going to read it again. Obviously, you're going to be wrong. You're always going to be wrong in the market, so you have to use proper risk management. But if you're managing risk, obviously no financial advice, but so we get a sweep of the low. I'm watching this down closing range as a potential CISD, right? I'm watching also this up closing candle to see if we want to hold that as just a deep retracement into this gap. So close above that. I'm already seeing this as a continuation up potentially towards. We have smooth highs here, even tap. We have a gap up here. I'm just marking out all the premium PDRAs on the 5-minute. If you go to the 15, you can also do that too, which works pretty similarly. Also have a gap all the way up here. I don't know if I'll reach that, but here's your SIBI. We'll play another 5-minute candle out just to show. So we're already popping up there, right? Now we can use any PDRA. And oh, I just accidentally clicked the. Oh, I clicked forward. So you're probably going to reach up into there. We'll draw 1030 out anyways. That's your full model. Boom. Now wait for 1030 if you want. So high put in there at 1015. And eventually it does continue into lunch, I think. There you go. So in this case, you missed this window, so we're tracing during this window. And then it pops up going into lunch, and we're taking more stops. And we finally cross above the high that was formed outside of time. So you can be either holding for the x-axis or holding for the y-axis. You're either holding for price over here, some sort of PDRA from the left side, or we're just holding from a continuous time standard of there's going to be a high. Look, that we're going to have almost every day, as long as we don't have 8:30 news or something wild. If we're bullish, we're going to see our 9:30 to 10 create the low, and our 10 to 10:30 create the high. Okay. And if this high then is formed over here, say we're estimating a high to be put in between here, right? That's what the profile says. If we put a high then outside of this and we know we're bullish, we already know we're bullish. We have an indication that we want to attack higher time frame buys liquidity and PDRAs. When we already know we're bullish in the first 15 minutes, then we can assume that any high that's placed outside of that time window is a false high, and we're going to eventually return back up into it. It could be all the way in the PM session. It could be the next day. As long as this reversal point isn't taken out, we want to see a high outside of time then taken. So we'll see if this is a Thursday. We'll see if we can do it again on Friday. All right, so before we actually move on to the rest of the video, I'm sure you're probably confused and it doesn't make a whole lot of sense. And when I recorded it the first time, I don't think I gave a good explanation of what we're actually doing. So we'll save it for the people who stuck around first 8 minutes or so of me yapping. But what am I actually looking at, I guess, is the question. So first of all, the windows are always going to be the preferred window. It's going to be something like this. That's what I drew out, right? On the profile. And the window is going to be 9:30 to 10, creates the low, if we're bullish in this case. And I messed up, but it was 10:30 to 11. That was for this specific example. Now, since we know this is a likely profile. I'll show you more profiles later in the video. But this 5-minute candle technique, we're looking between the candles of 9:30 and 9:45. Each 5-minute candle, sometimes over to 9:50. So there's around 3 to 4 different 5-minute candles we will read. And those candles will show us an SMR most times with a CISD or a continuation. So each of these candles, I'm watching that as they print. We're looking at each candle and we're trying to guess. Okay, we're not guess, but read as 9:30 comes in. Are we sweeping buy side or sell side? And is there a confirmation that we're continuing that direction? So in the first example I showed you, we'd pierce both sides and then it continues and then it continues lower and we break that CISD. And then if you look at today, over this little chart here, this is today's price action. Here's 9:30, comes in, pierces the high. So we don't just immediately look at this as a reversal. We don't know for sure yet. We wait for 9:45 because then it gives you more data and confirmation, because then you have from 9:45, 9:50-ish up until 10:30 to just find an entry towards your drawn liquidity. And you're just capturing really this entire range instead of the entire. Once you get really good at it, you can capture the entire thing. But we're really looking at like that much, sometimes even just this much is all we need. This kind of center area. That's the preferred kind of method and the preferred target that we're looking for. Anything in this range. So we're skipping out on this sometimes, and we're targeting very occasionally with a runner up to this time window. So going back to this example, pierces the high, goes back down, and this one prints again, and I'm watching that bullish order block. I'll do this later in the video too, and then it closes all the way through. So it's these first 4 or 5-minute candles. Now with that in mind, now watch the rest of the video and hopefully it should make more sense as to why I'm pulling levels and finding a bias so quickly with these first couple candles. You can tell when you add the lipstick, it makes more sense. But without it, you don't even really need to go to 10:30 here. So played up to 9:30. So trading above this down closing candle. I'm watching it here. If we hold this bearish order block, that would be of interest to me. Just to the gaps. Now trades below this down closing candle, right? So this to me, if you go to the 15-minute chart, that looks like the Judah swing. So can go short here. Stop above the reversal point. I'm just doing it from the 5-minute chart, but you could do it from the 1-minute if you wanted a true reversal. You have a gap in there. Just about to fill, but anyways. Almost a 1-to-1, over 1-to-1. Something gets stopped out. So it's not going to be perfect. You can see we did get some displacement to the outside there, right at 950. But so was it, if you go to the 1-minute chart, it'll be difficult too, right? Easy day? No. It's a tradable, it is, but we get 20 points off this actually. We do get 20 points off this. So if you're looking at minimums, then you do get your minimum price target. So if you're looking for minimums, it doesn't hit the full take profit. This model is consistent, almost an everyday model. So sweeps a little sell side, trading above or holding this bullish order block, and we're trading above here. Trades up again, trades up again. So I'm bullish here, making sure we don't trade below the CISD point, targeting 5-minute high. Runs through, see if we can get to 1030 now. Tracing. Here's your sell side. Takes out the sell side. So meets the bullish PD array, meets the PD array we're looking for up here, and then reverses prematurely. So this is a deep, this is what I would look at as a deep Judah swing. We're looking at higher time from Judah swing. Above here. Now watch. We'll continue down into these areas, I assume, going further into time. Yep. Yeah, this stuff is too fun. Anyways. Oh, that's not what I want to do. Actually, we actually still go long here. Sweep down here, holds the bullish PD areas. Here's 945, and we're holding the bullishness. So I'm actually comfortable going long here. Put a stop at the intermediate term low. Obviously, we don't want to be using this wide of a stop, but just for example purposes. And there's your drawn liquidity hit. Same thing here. So we have a bullish candle, holds the bearish order block here as we tap down at 945 and close back up. Okay, so order flow in this case is bullish as we hit 945. Drop down to a 1. You can see still holding this. You can wait, a couple minutes. Then just look for any bullish PD after that. Well, we have a gap here and a gap here. Either gap you use, in this case, you have to put your stop below the fair value gap below, which is never hit. Don't ever hit that low. Don't ever hit this low either. So you get close to drawdown there at 1014. You're looking for 20 points. You probably get 20 points from this one for sure and this one. So you get your minimums pretty quickly before you even get the drawdown. If you're looking for time exit or the higher drawn liquidity, yeah, it's 68 points, but obviously you can be tightening this drawdown to potentially here 32 points or less. And if you go to a 15-minute chart, maybe you can see this as a reversal clearly, but it's a little bit harder, I think, in my opinion. 1-minute chart, I think it's harder to see this as a Judah swing too, but use the 5-minute, you get confirmation that we're doing what we're doing. Just wait out this first 15 minutes or so, because most of the examples I've seen, let me pull up my Notion really quick and you can see. All right, so we've got here 930, 945. You draw that imaginary line in all these pictures. Sweeps the buy side, breaks down, continues into time. There's going to be a couple of these that are difficult, but this is going to be before news, or if we have a shallow run at 930. Don't forget those ones. Runs up here, 945. We're holding the bearish order blocks. We have a 5-minute CISD in there. Trades into it, trades into the 5-minute gap, sells off into time. And when I say sell off into time, sells off until a specific time in the market. It's always going to be around 10:30 and 11 o'clock. If we form a low outside of that time, expect to run then into lunch as we take that low out again. Judah's formed within 9:30 and 10 o'clock. Now wicks are doing the damage here, but we're still holding this bullish order block, right? We never close below this bullish order block. As we sweep the sell side, as we close above it, this entire order block range, if you extend this out, it doesn't close below. So although we get this wick that takes out this low, we're going to be using preferably a bullish PD array. So we may get stopped on. This is a difficult one for sure. But if you look at the next day, it may actually be 8:30 news. Let's see. I promise I'm not making this up. I promise I'm not making this up. Anyways, so your days are going to be, before, like if we go, look, 8:30 news. This is going to be difficult, right? I promise this isn't planned. Difficult, not impossible, but difficult. Not impossible, but difficult. We got one trade here, one trade here. I actually like that kind of day. This is a Monday and no news before an 8:30. Difficult here. Definitely difficult. So just be mindful of all this stuff. It tells you, your economic calendar tells you, shout out to Market Maker Turbo, just tells you what to do and what to look for. And you just have 3 different profiles. You have your difficult days before 8:30 news. You have sometimes 2 liquidity sweeps at 9:30 and at 10 o'clock-ish, maybe 10:30. Then you have your 8:30 liquidity sweeps and continuation, something like this. And then you have your standard power of 3, sometimes 8:30, 9:30 sweeps low. Things like this. 9:30 run, trades back lower and displaces into time. All right, so I don't want to overcomplicate this, but using all that framework and everything, there's really 3 different morning profiles that ICT has given us. And if you've watched the, I think, core content streams, either core content month 10 or month 7, there's a video in one of those. I'll put it up on the screen now if you want to go and watch it. But he talks about the AM profiles for indices and what they look like. Obviously, there's 3 up here on the screen. You can flip them for bearish markets. These are all bullish examples, but there's going to be one where we have a wider kind of MMXM or a wider range. So we have one where it's a quick Judah swing expansion, then another one that's a little bit harder to capture, where we're going to have almost 2 Judah swings in the range and then continuation. Now, if we use these 3, and I've kind of made about 7 or so different profiles that we've seen using more time-based stuff. If you want this PDF, you can shoot me a DM on Discord and I'll share it to you. But each of these profiles have their own kind of purpose, and I'll show you that this one right here was used today, where we had a 8:30 liquidity sweep, a 9:30 liquidity sweep. I'll add the framework to it of the 3 to 4 5-minute candles and then finding a 1-minute entry towards strong liquidity. It was super easy today, able to capture it on stream. But if we go back, so yeah, just study that stuff and then study these profiles, because if you pair these together, it's way more powerful than you think. A lot of days find a trade every single day, assuming it's not low probability. So in here, let me mute this. We've got 9:30 print. So we have 8:30 news. Okay, so if you can see it right here, we purge the sell side right at 8:30. And the profile is 9:30 purge the high. There's some bias of liquidity and a gap on the 15-minute chart that we purged there. And we're targeting now the sell side liquidity pool. So if we go into the notion, that is going to be this one, but just flipped on its head. 8:30 liquidity sweep, 9:30 sweeps the other side, and it creates a market maker model into 10 o'clock or 10:30. Now, if you look at the first 3 to 4 different 5-minute candles, if you just go over the 5-minute chart. So 9:30 is this line. We have the first one printing. Then we have, I'm watching this bullish order block. Okay, this down closing candle right here. I'm watching that. We've held it so far, held it there with the candle bodies, right? All the candle bodies are closing above this down closing candle. Then we have the first one, 9:30, 9:35, sweeps the sell side. So you don't know at this point, are we likely to trade up or trade down? So that's why you want to look at the first 3. Still holding this bullish order block, and then 9:45 comes and we trade a little bit up and then smash all the way down through this last down closing candle. So that would be your change in state. Now we know there's a very high likely that we're going to expand towards the 8:30 sell side, which is a draw. And then we also have London low all the way further down, about 120, 130 points. So now you can just use any entry technique you see, pairing it with time. Any 1-minute order block, we have a mitigation block in here. That's what ICT entered on today. But then if you skip forward, there's also a fair value gap that's created on the 1-minute time frame right there. We can short that, trades up into the gap, and then if we play it all the way through, eventually trades all the way down to the sell side, all the way into London low. And there's that entry point right there, pretty optimal, maybe like a couple points to draw down, but nothing crazy, displaces. And then we get a market maker buy model, the 2022 model off of the London low, trades into lower risk area, and then we eventually take out applies to the liquidity rules that we have marked out later in the stream. But that's the model in action today. And you can go back into old backtesting. A lot of your AM sessions, you'll see that if you pair the profiles with what we're expecting at 8:30, 9:30, and 10, we want to see a sweep of liquidity at one of those 3 points. Pair it with a 5-minute candle reading. Pair it with the macro time if you want to use macro times to enter. Pair it with higher time frame knowledge, all those different things. It's extremely useful. And this is probably the model that will be your bread and butter setups. So I love the good stuff at the end. This is the full kind of mechanical written down parts of it if you want to copy this, but 8:30, 9:30, or 10 liquidity sweep on the 15 or 5-minute, 5-minute change in state, 1-minute entry, and then we're using market profile to top us out. And the example I gave you was using 9:30, reading the first 3 to 4 5-minute candles, watching up until 9:45 because there can be potentially 2 Judas swings, then this SMR, continuation, etc. But I implore you to go and backtest all of this data. Look at old screenshots, old models that you have, and even old live streams of mine where you see this kind of happen almost every single day. And it truly is an everyday model if you understand it perfectly, which I don't think anyone's going to get to that point. But if you're able to understand it with some degree of consistency and find exactly what you may add to this and exactly what you're looking for every day, I think you'll find great success with something like this. And you can even pair it up with macro times. You can pair it up with silver bullet. You can pair it up with a bunch of different things, SMT. And I think anyone can find great success if they truly put the work in and have discipline to stay patient, that this model will provide you everything that you need. So if you found this video helpful in any way, I'd greatly appreciate it if you leave a like and subscribe. It means a whole lot to me. If you got any questions or concerns, leave them in the comments below, or you can shoot me a DM on Discord. That's all in the description as well. I've got a private group. I'll put it up on the screen now. If you like this kind of content, you want to see it every day, see a little more exclusive behind the scenes stuff that we share with the group, that might be something that you're looking for. Otherwise, until I see you next time, good luck, good trading, peace.